Hello students, you are welcome to today's class. I want to look at the meaning of cash book. In today's class, we'll be looking at the features of a cash book. We'll also look at the types of cash book, advantages of cash book, and how to prepare a cash book, and also the guiding, one of the guiding principles on how to prepare a cash book. Now, what is a cash book? A cash book is a book of original entry as well as a ledger used to record all cash transactions. A cash book is a book where all cash receipts and payments are recorded. It's also a book used for recording receipts and payment of money in cash or check. So essentially what a cash book is meant for is for us to record all cash transactions, all money received and all money paid out will appear in the cash book. So the ones we use our normal raw cash to pay for, and also the ones we use our check. The check looks like your normal bank draft that you use in paying your fees. So now that you are at home, if you know you have not seen a sample of check, you please ask your parents so that you see a sample of a check. So the check, for those of you that have handled your bank draft, the check looks exactly like as if it's the way your bank draft looks like. That's how a check, but there are some little things that makes a check different from your bank draft. Now we want to look at the features of cash book. A cash book plays a dual role. It is a book of original entry as well as also a book of final entries, a ledger, also a ledger account. If we check for those of you in last class when we had a class on special journals, you see that we mentioned cash book as one of the books of original entry, and also you are seeing it here too as part of the features. That is why it plays a dual role. It has the function of the books of original entry, and also it is also a ledger account. When we get to UB2, we'll see the ledger account in action. Now the next one we have is a cash book has two identical sides. A cash book is usually divided into two sides. It has the left hand side and the right hand side. The left hand side is the side we call the debit side, and the right hand side is the side we call the credit side. Now when money is coming into the organization, every transaction that has to do with money coming into an organization will always be recorded on the debit side. Then any transaction that involves money leaving the organization, meaning their cash balance reducing, will appear on the credit side. Now, what are the advantages of cash book? The first one, we have cash book. With cash book, you can have your daily account of your cash receipt and payments. If you want to know how much was received daily with the cash book, we'll get that information. And if you want to know how much was paid out for any item, we'll be able to get that information through the cash book. Then also, apart from we knowing all the money received in an organization and also the money paid out, one other important thing we can use the cash book for is we can also use the cash book to know our cash balance at any point in time. That's why you see that when you prepare your cash book or any sample of cash book you pick, you always see a balance carried down and a balance brought down. The balance brought down will always be at the beginning, while the balance carried down will always be at the end. The balance brought down is telling you the cash they have at the beginning of the period, while the balance carried down will tell you the cash they have at the end of that particular period. Then also any mistake in the book can be easily detected at any time of verification of cash. When we want to verify cash in terms of counting, this is how much we had before and this is what we have left. Any mistake can easily be detected with the help of what? The cash book. Then any deviation, that stealing of money, can be detected while verifying what? Cash. So if there's any issue that has to do with what? Stealing of money or anything, it will also be what? Easy to detect through the cash book. Then we have cash book. Since it's verified every day, cash book will always be kept up to date. So one advantage of cash book is that it will also make sure that your records are up to date. Now, what are the types of cash book? We have the one column cash book, or you call it the single column cash book. We have the two column cash book, or you call it the double column cash book. We have the three column cash book, or you call it triple column cash book. And the last one we have is what we call the petty cash book. Now, a single column cash book. A single column cash book is called single because it has only one column for the amount. It has only one column for the amount. Now, if money is coming to the organization, it appears under this amount column, and if money is going out, it appears on the amount column. So from this date to amount here, all this side is what we call the debit side, and this is from this date to here is what we call the credit side. That's why you can see that it has two identical sides. So it is called single column cash book because it has only one amount column. This is called two column cash book because it has two columns. It has column to recognize cash transaction and also bank transaction, meaning transactions that were carried out through the use of our normal cash and transactions that were carried out using the check can be recorded in the two column cash book, unlike the single column cash book that recognize only one type of transaction. In the single column cash book, you can only record either you are recording transactions you carried out through your raw cash, or you can record transactions you carried out through using the check. You can't have both in the same record, but the two column cash book has provision for that. We can recognize transactions using that of our raw cash and that of the transactions through the check. Now, the three column cash book is called three column cash book because it has three columns. The first one, the cash column, it has the bank column, it has the discount allowed column. Now, why it is called three column cash book is because apart from it recognizing transactions that were carried out using your normal cash and transactions carried out through the check, it has provision for what we call discount transactions, meaning as a seller you had customers who came to your business organization or your organization, and there were a number of negotiation. Maybe you said a particular item, maybe let's say for instance you wanted to sell a particular pack of juice for 1,000 naira, and the buyer was able to negotiate and say, no, I'm not paying for 1,000 naira, I want to pay 800 naira, and you accepted and you allowed him. That this the difference between the 1,000 and 800 naira will give you 200 naira. That 200 naira that you allowed for that customer who could bargain very well is a discount allowed and is expected to appear on the debit side of your cash book. That is why it is three column cash book. Then on your own part as a seller too, you are entitled to discount also from your supplier, maybe where you buy goods in bulk and they decide that now say this is a good customer who always pays her money on time, this is a customer that does not owe, this is a customer that keeps record, this is a customer that is always prompt in payment. The supplier can decide out of his own free will to encourage you, since you always pay on time, to decide to give you discount. Maybe the pack of juice from the supplier usually he always give you at the rate of 700 naira, he can decide to say no, pay 600 naira. That 100 naira discount that is given to you is a discount received to you the seller, and will always appear on the credit side on the three column cash book. So that is why this cash book is called three column cash book, because it has three columns. Number one, the column, it has cash column to recognize transactions carried out through the raw cash. It has bank column to recognize transactions using the check, and it also have column to recognize transactions that have to do with discount either on the part of the customer or discount on the part of supplier which is given to the seller. Now, the last type of cash book that we have is what we call the petty cash book. And the petty cash book is essentially a cash book that is used to record minor expenses. When we say minor expenses, we are looking at small expenses in a business organization. As large as an organization can be, there are bound to be smaller expenditure, and this smaller expenditure, if they don't want to overburden their main cash book with small amounts of money, they can now decide to create a separate book which will now be called the petty cash book to recognize all these small expenses. For instance, maybe an organization that have transactions in billions, in trillions, in millions can decide to have a small petty cash book to recognize transactions that have to do with thousands, so that thousands will not mix up with billions and trillions. million so that the cashier can really give account of money very well. So most of the time this petty cash book is essentially to recognize items that are small expenditure. So that's the purpose of the petty cash book, and is to reduce the burden on the main cashier so that he does not mix up figures, and to reduce, or let's say minimize, errors. Now, how do we prepare a cash book? The first step is to write the name of the business. It's essential you always write the name of the business so that whosoever that picks the business record will know the owner of the business. So if it's a business organization, the name, and if it's a sole proprietorship business, the name of the owner should reflect. And the next thing is for us to show the title of the account so that we know which record you are preparing. Is it a one column cash book? Is it a two column cash book? It's essential you help us with the title. Also, the step 2 is for you to record all receipt items on the debit side and all payment items on the credit side. Items that are bringing in more money to the organization will always appear on the debit side, while items that shows that money is going out of the organization will always appear on the credit side. Now, receipt items, what are the examples of receipt items? Items like capital are receipt items. Items like sales are receipt items. Cash received from debtors or customers are receipt items. And also, if the business received a loan from any individual, either private individual or organizations, will also appear on the debit side. Then payment items are usually purchase of goods, where purchases of assets such as furniture, motor vehicles, office equipment, when you pay for rent, insurance, electricity, salaries and wages. When you are paying for anything, it appears on the credit side. Then after you have finished posting, what are you expected to do? The next thing is for you to add up the total of each side. Add up the total of each side, know the total item on the debit side and know the total item on the credit side, then find the difference. Now, this is how a single column cash will look like. You see that the calculation, when you were given an assignment on this, you were tested on only one column, because at your level being UB1 class, you will only be tested on one column. Is when you get to UB2 that you see other types of cash book. Now you see the name, the sole proprietor here is Adewari Jaja, and that's why we say book of Adewari Jaja, and the title of the account, you see one column cash book, and it's for the month of May 2018. Now you see the debit side is there, and we have the credit side. If you check the date column, is to recognize the dates in which each of the transactions took place, and you see the items that we have on the debit side. We have capital, you have sales. Now this, we receive money from Ayume Pascal, we sold goods, and we receive money also from Aja Uchechi, and that's why these items are appearing on the debit side. And you see the items appearing on the credit side. We have purchases, we have purchase of furniture, electricity, we paid for it, telephone, office. At the end, we, to prepare this cash book, we added everything on this side. If you add everything here, you have 65,000 naira, and if you add everything here, you will get the figure there, and then you find the difference. By the time you find the difference between this, it will give you your 51,800, and this is the difference. And this is now your cash in hand, meaning this is what you have at the end of the period. So thank you for listening. We'll meet next class.